Past performance is no guarantee of future results. Content is offered for information purposes only. Unless stated otherwise, any and all individuals participating in the video are third parties that include both professional investors and individual investors who may not be licensed or certified by any institute or regulatory body. Unless stated otherwise, the views or opinions expressed may not reflect those of Seeking Alpha as a whole. The accuracy and completeness of content shared cannot be guaranteed. Seeking Alpha does not take account of your objectives or financial situation and does not offer any personalized investment advice. Seeking Alpha is not a licensed securities dealer, broker, U.S. investment advisor, or investment bank.
Hey everybody, it's Nicole Benjamin, your host here at Seeking Alpha, bringing to you an episode of our new series, Portfolio Pulse, where, as the name suggests, we're going to be keeping a pulse to all the big financial moves happening in the market. Now, for today's episode, we're joined by Seeking Alpha analyst Uttam Dey, who's going to be diving into all the big financial moves happening with Astera Labs and Marvell Technologies. So, without further ado, Uttam, thank you so much for joining us today.
Thanks for having me, Nicole.
Absolutely. So just for our listeners here, could you tell us a little bit more about yourself, who you are, what brought you into the financial space, how you started writing on Seeking Alpha? I see you've been with us since 2023. So yeah, give our listeners a little bit more about your background.
Yeah, I've always been fascinated by technology. I've just been dabbling with assembling computers here and there since I was a kid. And then I do have some experience, actually a lot of experience working in the Silicon Valley area. So I worked in product roles for some big technology companies in the Silicon Valley area. And then along that time, I also started writing as well as investing for technology companies. And I realized this is something I'm really passionate about. And that's got me through this multi-year journey where I started writing for Seeking Alpha. Someone introduced me to this platform. I joined in 2023, and it's been a wonderful, great ride ever since. I'm learning and also, writing along the way, and that it's amazing.
Well, thanks again for joining us, Uttam. Now, I want to dive right in. You wrote an article called Marvell Technologies and Astera Labs, Quiet Winners from Surging Memory Prices. Now, for anybody that wants to follow along, we're going to be looking at ticker symbol ALAB and MRVL. Now, my first question I want to ask you, Tom, is in your article, you wrote that DRAM has shot up about 4 times in the last few months. So what is DRAM and why does that matter so much? And does it mean that it's getting too expensive for companies like Microsoft and Google to even be running their AI? Can you dive a little bit deeper there?
Yeah. The industry calls it DRAM. That's dynamic random access memory. So it's essentially just semiconductor chips, basically just components that really act as the computer's application memory. So any application that needs to run out of a computer, it is going to require memory, and that's where computer makers, they put in some amount of DRAM, right? Over the years, there's been many iterations of DRAM. In the current iteration that we are in, we have DDR5, and we're just transitioning to that from DDR4, and that's basically been this transition through each and every year. In the age of AI, DRAM has become really, really important because AI workloads require 2 things. They require compute, and then they also require memory. These are the 2 things that you have 4 to 5 kinds of AI workloads, and any AI workload is going to require compute and then DRAM. What's happened over these past few years in the Chat GPT, in the post Chat GPT era, is that the amount of compute requirements has skyrocketed, and then memory requirements have also skyrocketed. And so you have all these different vendors. So there's DRAM is actually manufactured and controlled by this troika of manufacturers called, there's SK Hynix, and then there's Samsung, and then there's Micron. And so all these 3 global manufacturers control about 90-95% of the DRAM supply in the world. what all of these companies have started doing, or they have already been doing, is that they've figured out how to exponentially increase the amount of DRAM capacity that they can give to all the AI workloads that requires all of the memory requirements. And so HBM, or high bandwidth memory, was born.
So Marvell's tech gives older, cheaper memory a second life. So does this mean that companies could be saving billions of dollars by even buying last year's parts, so to speak, instead of buying brand new?
I think it's not Marvell's memory controller. It's just the entire. It's just what memory controls were designed to do, and you hit the point, on the head of the nail, because memory controllers is essentially giving all the legacy, DRAM and HBM. It's giving them the second lease of life. So many enterprises, your cloud companies, they're going back and they're trying to reduce their costs, and instead of buying the latest iterations of HBM, they're going back and they're buying the lower or the legacy HBM, that's HBM3, and they're trying to figure out how to just put them all together. So it's giving the legacy HBM, legacy DRAM is the second lease of life.
So I see here on Seeking Alpha that Astera Labs has a quant rating of a hold, but you gave it a strong buy, saying that its revenue could increase to over 100% within the next year. So with that in mind, and it being a newer company, what makes it a better bet than a bigger, more established one? Is it the deal with Microsoft Azure?
Yeah, I think I've been following Astera for a while, since they've gone IPO, and I think that management in that company, they're quite deep-rooted. They understand exactly, AI is moving really fast. Demand cycles are moving even faster. And then this management from Astera Labs, they understand all these demand cycles. So I'll give you a really quick rundown of Astera Labs. These guys had, their major business was in these small components called retimers, which would just boost the signals of the GPUs. That got really popular in server, in scale up and scale out networks within server architectures. And many hyperscalers started using Astera's retimers to boost the signals of GPUs. It was so great for Astera Labs that I think in calendar year 25, Astera Labs is poised to do about 830 million worth of revenue. That represents 170%, I think, CAGR between 2023 and 2025. Okay, but that's just from retimer devices. Now that represents about 3 billion in TAM. Astera Labs has figured out how to extend the TAM from 3 billion to 12 billion, and then the remaining 9 billion that Astera Labs has figured out, that is coming from memory controllers, which is the management estimates of about 4 billion, and the remaining it comes from switches. So I think this particular management really knows how to go after high growth, high margin, emerging tech areas where they can provide value.
Now, relatedly, you gave Marvell Technology a buy rating, and I see here on Seeking Alpha that it also has a buy rating and a lower price tag, a 9.5 revenue multiple valuation. So are they the safer option for somebody who wants that AI exposure without having to deal with the extreme roller coaster of a smaller stock?
I think about Marvell, they have memory controllers, and I think in a investor conference last month, they did reveal that because of their focus on memory controllers and this other product that they call, which is smart network interface cards, the combination of both these two product lines will give them access to about 2 billion in revenue over the next 3 years. So that's about, if you divide that, that's about 700 million per year over the next 3 years. Take into context Marvell's revenue, which is about 10 billion. And that you do see some meaningful or about moderate to meaningful impact that the projected sales of memory controllers and smart network interface cards will have for Marvell. The inherent issue that I feel like Marvell still is trying to iron out is they have this XPU business, which is their which is still facing some issues because they just have two clients. They have Amazon and then they have Microsoft.
So do you suspect that Wall Street isn't even accounting for the money these companies will make from memory controllers? I mean, if the experts are ignoring this and ignoring that, anybody that invests in Astera Labs or Marvel Technology, are they really getting ahead of the curve, possibly before the rest of the world catches up?
I think Wall Street is just being Wall Street out here. They're just being really cautious right now because memory controller is a new market that still has to deliver those outsized returns. But if you take Astera Labs, for example, Astera Labs, the markets were projecting about 34% increase in calendar year 2026 revenues of just over $1 billion. That's what the consensus estimates were, and these consensus estimates were in November. In the past 3 months, those estimates have gone up by about 13 or 14% to about 1.1 or 1.2 billion. That now is implying that Wall Street is estimating about a 42% jump.
Now, I have one more question for you before we get out of here. Every stock holds some risk. So if tomorrow memory controllers just tanked and the stock became cheap again, would the need for ownership of Astera Labs and Marvel Technology just go away? Or would they still be must-haves for AI infrastructure?
If you're talking about memory prices crashing, that, in my view, that would be reflective of this structural collapse in the broader AI ecosystem that's usually stemming from some kind of a systemic risk, right? And that systemic risk could manifest its ugly head either in the form of interest rates, either in the form of inflation spiking, maybe like a big, large company, heavily indebted company that's just defaulting on their loans. I do expect some kind of normalization in memory prices, but that's still elevated versus last year. So it still gives a good reason why memory controllers and that entire market is going to probably do well. More than memory prices crashing, I think the risk that investors need to look at is competition.
Well, I think that about wraps it up here. Thank you so much, Uttam, for joining us today. And for everybody that's listening, go ahead, follow Uttam Dey on Seeking Alpha. And if you haven't already, take a look into Astera Labs. Take a look at Marvel Technology. See if it's something that might be right for your portfolio. And we'll see you here next time.